What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. And we are back today with a very important market update, with the key theme of this video really being the global mass adoption that is occurring right now as we speak. And we've seen a ton of big moves from key players in the traditional finance industry this week alone to really adopt crypto and blockchain technology. And I am talking the likes of Fidelity, BlackRock, JP Morgan, Bank of America, as well as Visa and MasterCard. Then we got to talk about Quant here, which has been confirmed to be working with at least one major bank within every single region of the world on their upcoming CBDCs. And last but not least, we got to talk about two specific companies that have really been at the forefront of driving this mass adoption to the general public and to people who are less familiar with crypto. And that is both Polygon and Crypto.com, who have had some significant news come out for both this week. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Saturday, everyone. I hope you are all having an amazing start to your weekend. If you've not yet hit that sub and like button, please consider doing so and joining the Everything Crypto squad, and I love and appreciate you all. And now we're going to hop in here with the question of the day. And today's question is, gold currently has a market cap of 10 trillion. Do you think that the combined market cap of Bitcoin and Ethereum will surpass gold in the next 10 years? Let me know in the YouTube comments down below. Now, for some reference here, Bitcoin is currently sitting at a market cap of 396 billion and Ethereum at a market cap of 191 billion. If you put these two together, the combined market cap for the two biggest blue chips in the industry comes in at $587 billion. So with gold sitting at a market cap of just over 10 trillion, that means the combined valuation of Bitcoin and Ethereum would have to go up by 1,750% over the next 10 years, or an average of 175% a year. Do you think that this is possible in the next 10 years? Let me know in the YouTube comments down below. And if you are not one of the people that thinks this is possible, I do highly suggest you stick around for this video, because I may be able to change your mind as we do cover the slew of news that has come out this week in terms of this mass adoption happening. And we're going to start off with the smallest companies and then work our way up to the biggest. And for starters here, we see that Elon Musk has finally fully acquired Twitter. There have been videos of him today essentially kicking out majority of the staff as he aims to completely overhaul the company. And this is important because we know that Elon Musk is a bull on crypto, despite the controversial statements, to say the least, that he has made on Bitcoin. He has confirmed that he is a holder of Bitcoin, Ethereum, and Doge. And in classic crypto degen fashion, Doge actually has seen a nice pump on the speculation of Mr. Musk incorporating Doge payments into Twitter. And before anybody asks, do I own Doge? Am I trading Doge? The answer is no. I do not own any meme coins in my portfolio. And the reason being is that I think the next bull run is going to be led purely by utility. That is why I do not own meme coins that are pretty much dependent on hype news or somebody like Elon Musk actually pumping the price. Because as we have seen, he is definitely a very unpredictable man. But one thing that I do think is quite predictable when it comes to his acquisition of Twitter is that he is very interested in incorporating cryptocurrency payments into the social media platform. In fact, at his first Twitter all-hands meeting back in June, Mr. Musk discussed the integration of digital payments and actually cutting out the crypto-related scams and bots that really have been a big hindrance to this platform. And he says here, I think it would make sense to integrate payments into Twitter so that it is easy to send money back and forth, currency as well as crypto, he said at the time. Now, we also saw that Twitter announces these NFT tweet tiles, and effectively what this means is that links to NFTs on Rarible, Magic Eden, Dapper Labs, Jump Trade NFT, and I would imagine OpenSea are actually going to bring you a direct NFT link to the website where it can be purchased. So a lot more NFT integration happening on Twitter, as well as the potential for actually making payments in Twitter. And then last but not least, we saw a tweet here from researcher Jane Manchung Wong, and essentially she is known for testing out tech products and new features on the social media platform, including Twitter, and she was a big tester of the edit button for Twitter Blue members. Now, she reported on October 24th that Twitter is working on a wallet prototype that supports crypto deposits and withdrawals. So there you have it. Twitter, a company now being valued at $44 billion following the Elon Musk acquisition, is in fact taking steps to adopt crypto. And I think that is only going to accelerate with Elon Musk now in charge. So getting into the traditional finance giants that have been showing an increased interest in crypto and really been planning accordingly. Starting off with Fidelity, they have announced they are beefing up their crypto unit by another 25% with 100 new hires. So at a time when companies are cutting costs and unfortunately employees all around the world, these traditional finance giants are in fact beefing up their staff when it comes to their crypto unit specifically. And this is very bullish because it shows you that Fidelity is banking on these new 100 staff members, actually bringing them more value in the long run, as they do help Fidelity really take control of cryptocurrency, or rather their own business strategy when it comes to crypto. So they are now planning to have around 500 total staff members by the first quarter of 2023. And they said in a statement to Cointelegraph that the firm was in a unique position to offer exposure to the emerging digital assets sector, and these are its reasons for pushing for more talent to bolster its arm of the business. Now, it's not a coincidence that this report came out on October 24th, and then 3 days later on October 27th, Fidelity actually released their very own institutional survey, which showed that 74% of institutions are planning to buy crypto. So we can see here, we actually took a look at the survey itself, and I think the important stuff starts on page 12. Actually, no, first, I want to show you guys exactly who was involved in this report so you can see that these were heavy hitters, okay? We are talking about financial advisors, high net worth investors, family offices, pension funds, crypto funds, endowments / foundations, and traditional hedge funds were all involved in this sample. And you can see here that based on the results, that in total, 74% of investors plan to buy or invest in digital assets in the future, up from 71% in 2021. So U.S. high net worth investors survey reported a substantial increase in future preference to buy digital assets, increasing from 31% to 74% year over year. This once again shows you a fundamental shift in the way that people are viewing cryptocurrency. I believe that a lot of people are going to really change their perspective from viewing it as a very risky asset to almost a necessary asset. And I think that at this point, it is more of a risk to not own crypto than it is to own it. Now, in total, 58% of the surveyed institutional investors reported owning digital assets in the first half of 2022, representing an increase of 6% year over year. Digital asset ownership was highest in Asia, with 69% of institutions in the region reporting investments in the segment. And then we saw 69% in Europe and 42% in the US. So clearly, adoption is still the lowest in the US, and I think that has a lot to do with the really lack of regulatory clarity. Once again, the US is definitely behind in terms of crypto adoption, and they really do need to catch up, in my opinion. And I think that is why the traditional finance giants in the States are really starting to take this more seriously and try to show governments why it is important to adopt crypto moving forward. Fidelity survey also shows growing respect for crypto, as about 35% of respondents believe that digital assets should be viewed as an independent investment class, up from 23% in 2021. And basically, this means kind of what we've been talking about in terms of the decoupling from the stock market. I don't think crypto has any business being compared to the traditional finance market. I think it is going to offer a much higher return than the traditional finance sector over the next 10 years, and it should be treated with that respect, which is growing year over year. Once again, really just showing the very early phases of a lot of maturation for the asset class. And we know that Fidelity has been bullish on crypto for a while. And the first announcement actually came back here in April when they did announce they would be the first asset manager to offer 401k investors access to Bitcoin. So as the nation's largest retirement plan provider, Fidelity's decision definitely, I think, did help kickstart the adoption for cryptocurrency. Regulators have urged caution against involving cryptos in 401ks, citing speculation, volatility, and high valuations for their concerns. Ironically, these are probably the same regulators that are invested in companies like Meta, down 22% over the past 5 days, down 69% over the past 5 years. Or let's look at a stock like Amazon that they also think is less risky Nike and 401ks, down 13% in the past 5 days and down 38% in the past year. So a lot of hypocrisy there that I think is going to really be brought to light in future years. And once again, let's just keep in mind that while these tech stocks have been absolutely cratering over the past couple of days, Bitcoin and Ethereum have been moving up. Now, we also saw following their push into Bitcoin that Fidelity just recently on October 4th announced that they are adding crypto offerings with their Ethereum index fund. They have raised $5 million since their sales opened in late September. The reason they are doing this is because based on a quote from them, they said they have continued to see client demand for exposure to digital assets beyond Bitcoin. And obviously, the next in line would be Ethereum. That is why I do believe that, a lot of people tend to seek like these altcoins and seek a much more explosive gains in the market. I still think that although altcoins are going to provide probably a lot more lucrative returns than Bitcoin specifically, I think first of all that Ethereum is still going to be a top performer in the next bull run. And on top of that, that when this mass adoption happens, that Bitcoin and ETH are going to be the first two that are really adopted in mainstream society. And the reason being is quite simple. We already talked about how Bitcoin and ETH have the highest valuations, with Bitcoin over 390 bill and ETH just over 190 bill. So these asset managers are going to want to really enter the ecosystems with the most money involved, because that will attract the most outside capital. And that is why Bitcoin and ETH will be the first to be adopted, in my opinion. Now, the minimum investment for this new Ethereum fund is $50,000. And I do believe over time they are going to make it more accessible to the general public, but they really are just targeting these institutions first with this minimum investment cost. And little side note here, look at the Crypto.com exchange advertisement right on the article page for CoinDesk. So now we have talked about Fidelity. Let's talk about BlackRock, the largest asset manager in the world, who did have over $10 trillion in assets under management, now down to 8.5 after the bear market has really done a number even on these bigger asset managers. And it was effectively announced here that Coinbase is partnering up with BlackRock to provide institutional clients of BlackRock Aladdin, their end-to-end investment management platform, with direct access to crypto, starting with Bitcoin through connectivity with Coinbase Prime. So Coinbase Prime is providing crypto trading, custody, prime brokerage, and reporting capabilities to Aladdin's institutional client base, who are now also clients of Coinbase. So effectively targeting these institutional clients at BlackRock. This is a very mutually beneficial partnership, as it basically brought a ton of money into Coinbase and also allowed these BlackRock customers to really get their hands on crypto, which we know BlackRock really wants to do, because they see the potential, they see all the money sitting on the sidelines, and you better believe that these asset managers want to really capture a ton of this money just waiting to hop into the market. So what does it tell you when you see the biggest asset manager in the world partnering up with one of the biggest crypto exchanges in the world to offer this asset class to their most wealthy clients? That tells you that big money wants in, despite what narrative the social media platforms and the news push. Big money wants in on crypto. They want you to sell your crypto to them. Do not sell your crypto to them for any less than it is worth. Now, getting into the banks, starting off here with Bank of America explaining why you should own Bitcoin. And this was a very interesting note from the bank. So they said here that basically $84 trillion is expected to pass primarily from the baby boomers to Gen X and millennials through 2045. Now, what they also say here about Gen X and millennials is that nearly half, so 47%, have cryptocurrency holdings. And we do expect this number to increase drastically in the coming years, as crypto adoption has really been increasing at a very rapid pace. So imagine this. Let's say that about 80% of Gen X and millennials do have their hands on crypto in the next 10 years. And then you factor in the fact that $84 trillion worth of money is going to essentially be passed down from the baby boomers to Gen X and millennials. And you can definitely see how a lot of this money could flow into cryptocurrency. Now, keep in mind that with crypto currently sitting under a market cap of $1 trillion, to see $84 trillion passed down to generations that are a lot more crypto friendly could definitely mean very explosive moves for the industry. And once again, that just like these financial institutions, that the banks also want to get ahead of this curve and adopt crypto before they are essentially completely priced out of the industry. And I'm not saying that banks are ever going to go away, because we know they are not, but we also know that as time goes on, as more and more people begin to understand the power of investing in Bitcoin as opposed to giving your money to the bank who gives you a, like, let's just be honest, an absolutely garbage interest rate, that yes, that can mean a lot of money flowing out of the banks, and they do not want that to happen. Now, we know the Bank of America has been bullish on digital assets and Bitcoin since 2021, but they are really just ramping up the research now, and they actually specifically cite that although they are bullish on Bitcoin, and that was the focus of the article that just came out, they are also very bullish on these blockchains that do allow for smart contracts, pretty much comparing these projects like Ethereum to Apple iPhones, saying that digital assets that enable a platform to be built like the Apple iPhone did for applications are gaining the most value. And you can see here that they did specifically mention Ethereum, Cardano, as well as BNB coin. They do also cite the increasing relevance of stablecoins and the potential of CBDCs. We know that all of these banks want to get their hands on CBDCs, and they've been talking about this for a very long time now, but really now we are just starting to see it at sort of the forefront of the media, as it is becoming a more pressing matter for the US to finally begin adopting this technology. So that is Bank of America. Now let's talk about JP Morgan, who we know has owned critical Ethereum infrastructure for quite some while now. In fact, they do have a 10% stake in ConsenSys, and ConsenSys is the owner and creator of both MetaMask, the most popular Ethereum DeFi wallet, and Infura, one of the node network providers that processes about 13 billion code requests every single day. So yes, Bank of America and JP Morgan are now also very bullish on crypto as well. They have been for a while, and it's ironic because at the same time we've seen JP Morgan actually calling out crypto being a decentralized Ponzi scheme, while their actions clearly say otherwise behind the scenes. And that is why I tell you, do not listen to what these banks say, to what these financial institutions say. Actions speak louder than words, and their actions clearly show you they are incredibly bullish on the future of crypto, despite what they are saying to the mainstream media. In fact, we did also see here that on October 11th, Visa and JP Morgan combined their blockchain payment networks B2B and Connect, and as a part of the new partnership, Visa's B2B Connect will use Confirm, a new solution developed by Link, which is JP Morgan's, to verify new accounts for cross-border transactions and profiles when new users join the platform. So a traditional bank and a payment processor here actually joining forces, and this is ironic, right? Because Visa and MasterCard, these payment processors, were initially sort of being deemed as like the companies that would overthrow the banks, and now crypto is the asset class that is being seen as having the potential to overthrow both these payment processors and these traditional banks. So now these banks and these payment processors are teaming up to adopt this technology. There is a very clear pattern here of the old world order essentially being forced to adopt the new world order, the same way that banks were forced to incorporate these payment processors into their business models a while back. So speaking of Visa, we actually also saw that they could launch its own crypto wallet compared to two trademark applications. So here are the two big ones. First one is software for management of digital transactions, the use as a digital currency wallet and storage services software, use as a cryptocurrency wallet, and managing and verifying cryptocurrency transactions using a blockchain technology. They go on past actually the trademark application for a crypto wallet to also talk about a trademark for non-downloadable virtual goods, namely a collectible series of non-fungible tokens, as well as providing virtual environments in which users can interact for recreational, leisure, or entertainment purposes accessible in the virtual world, otherwise known as the metaverse. So Visa is trying to file a ton of trademark applications for crypto, NFTs, and the metaverse, signaling they are bullish on this industry as a whole. Now, here is a statistic to really summarize exactly why these banks and institutions are so bullish on this asset class. Take a look at this. In its first 2 years, Bitcoin settled just over $2 million in value, okay? By year 3, 2.5 billion. By year 5, 100 billion. By year 8, 1 trillion. By year 10, 8 trillion. And today, Bitcoin has settled over $103 trillion worth of value. That is truly incredible. That is exponential growth. And that is why these banks and payment processors know they need to start showing some serious respect to this industry. And once again, I do believe it's going to start off with the two biggest names in the industry in the form of Bitcoin and Ethereum. So we've discussed the traditional finance companies that are adopting crypto. Now we're going to talk about the main 3 projects, in my opinion, that are bringing crypto to the masses, and that is Polygon, Quant, and Crypto.com. That is why I think they're going to be some of the best performers in the next bull market, as adoption and centralization are going to be key themes, in my opinion. And starting off with this very good Twitter thread here regarding Polygon. And this is going to talk about the Reddit deal, the Nubank deal, the Starbucks deal, other business development deals, as well as true adoption. So number 1, Reddit. We will start off with what has been a recent topic of conversation. Reddit partnered with Polygon to produce a collectible avatar shop where users can trade and purchase avatars with their dollars. This actually created 2.8 million users to actually have these wallets now and hold these NFTs. And the secondary market is on OpenSea. So users who have never actually interacted with crypto or NFTs are now being given this on-ramp. Avatars continue to evolve as you interact with Reddit, and you're going to see this adoption spread like wildfire through other social media platforms. I think this is inevitable and is going to bring the masses to Web3. So really creating that bridge from Web 2 over onto Web 3. We've also seen Instagram make very similar moves by now adding NFT incorporation into their platform, and I think this is only going to accelerate as well. We know Google and Twitter are looking to accept crypto payments. So number 2, Nubank. They have partnered up with Polygon, and Nubank is a South American bank with over 70 million active users. They have done this to create a token on the Polygon network to earn Nubank rewards on there. You are about to integrate Web3 into traditional finance for over 70 million people, finally seeing the blend of how Web3 has incredible use cases in the real world. Number 3, Starbucks, a recent partnership announcement to create a Starbucks loyalty program through Polygon's technology. 60 million people are served in Starbucks every single week. Polygon is leading the way to bring users to crypto, also partnering with Disney, DraftKings, the NFL, Liverpool FC, Stripe, Adobe, Meta, Adidas, amongst other things. So to summarize, Polygon is bringing real use cases to fruition. They are putting Web3 wallets into people's hands, the first step to global adoption. And what you will see next is a world that is using blockchain technology without even knowing it. True adoption, that is how you know you are early. So that is it for Polygon. We could elaborate on that more, but I don't think we have to, because really, enough said. I think Polygon is going to be a solid performer and is easily the best layer 2 in the industry, in my personal opinion. Now talking about Quant here, and we did discuss at the beginning of the video, or really in the intro, we teased how they have now been confirmed to pretty much be partnered up with big banks and financial institutions in pretty much every important region around the world. So for starters here, we can see that LAC Chain is a global alliance, and they are actually creating their very own Latin American chain. And why is this partnership so important? Well, let me actually find the chart here. Yeah, here it is. So about 80% of central banks are going to go for the Tier 2 CBDC model that is highlighted down here, and Quant with LAC Chain will be the first and biggest implementation of this architecture. The whole world is watching this, as Quant will be the first with the tech and the experience implementing at scale. So this is actually going to incorporate CBDCs for 12 different countries. Each jurisdiction can have its own infrastructure, so pick their own DLT. They can connect directly into their existing legacy infrastructure and also have corridors with the US and Europe. So what is going to obviously facilitate this interoperability? None other than the Quant Overledger, who is now partnered up with LAC Chain. So that is their Latin American dominance. Now let's talk about Nexi here, a well-known high-tech Italian company providing innovative solutions for the banking and finance sectors. And we did actually cover just a couple of days back how it was confirmed that Nexi, so EU's #1 paytech, processed 76% of in-store mobile transactions for all of Italy in the first half of 2022. That is a 185% increase in in-store smartphone transactions, representing 164% growth in volumes, and Quant is in fact set to capture majority of this growth. So think about that. Quant is now partnered up with a company that processes 76% of mobile transactions for all of Italy, okay? That is not a joke. So we talked Latin America, we've talked Europe. Now let's talk about the US in the form of Oracle. Let me find this here, yeah. So So this week, Oracle released new documentation revealing their global blockchain platform, global internet scale, enterprise grade blockchain infrastructure and orchestration, and what is going to facilitate this interoperability, allow the Oracle blockchain to interact with any other blockchain. That is none that is none other than the Quant Overledger. So although Oracle is a US based company, all of the technologies that it is setting up, even with these banks, is really creating the underlying infrastructure for a global payment system in which the Overledger is said to be at the very middle of. Okay, we talked about also last week how HSBC is tapping into Oracle to actually help facilitate the transformation of their digital business, with HSBC being the largest bank in Europe with over $10 trillion in assets. So yes, Quant's partnership, Quant's connections, they run deep here. For example, Oracle has 430,000 customers, which will now also potentially be harnessing the power of the Quant Overledger through actually using the Oracle cloud-based technology. And then we did talk yesterday about how one of the biggest banks in India is confirmed to be using the Quant Overledger technology, and that is in the form of the ICICI Bank. They have a network of 5,275 branches and in a presence of 17 countries, confirming the Overledger as their interoperability solution for trade finance. So real world use cases here. And now let's also talk about the UK. If there wasn't enough countries, and Quant actually tweeted this today, the introduction of a digital pound would provide a platform for innovation. It would help the UK maintain a leading edge in the global financial markets and fintech landscape. And we tweeted about this the other day, as Gilbert Verdian did actually tweet and directly tag the new Prime Minister of the UK, who is in fact very bullish on crypto and does have connections to Quant CEO. So we can see here that he was actually elected to become the new UK Prime Minister following the exit of Liz Truss. We have talked about videos of him actually really talking about the benefits of a CBDC. And we obviously know that these CBDCs benefit governments, not the people. But regardless, they're gonna come either way. And the next thing we are thinking about is how can we make money off of it. And I think Quant is one of the best opportunities to profit off of the upcoming CBDCs. We know that even before this new Prime Minister was brought into office, that Quant was already working with the Digital Pound Foundation here alongside Ripple. So yes, Quant is the second altcoin that I do think is going to really lead the next bull run in terms of that adoption and centralization. Now, last but not least, Crypto.com, they did announce a couple weeks back that they have a new European regional headquarters in Paris. You can also see here, this comes after a slew of regulatory approval over the previous months, including in France, in Singapore, in the UK, in Dubai, Cayman Islands, South Korea, Italy, Greece, Cyprus, Ontario. Australia. You guys can see where I'm going with this. They have really just been getting that regulatory approval in as many countries as possible to really be primed to capture a ton of that user growth in the next bull run, the same way that Polygon is putting wallets into everybody's hands, the same way that Quant is looking to be at the middle of the future of financial technology. Crypto.com is looking to be the platform that actually onboards all of these new customers that are being exposed to crypto. I think it is going to be a very effective strategy. And not to mention the fact that not only are they looking to do this through a centralized exchange, they are also looking to do this through DeFi in the form of their DeFi wallet, which now actually offers you the ability to swap on the top 9 blockchains by total value locked in the Crypto.com DeFi wallet. So let's actually go ahead and take a look at DeFi Llama here whenever it wants to load with my Wi-Fi. And then we're going to go over to the chains, and you can see right off the bat that the top 9 blockchains here, with Cronos being included, are all actually, you're able to transact with all of these top 9 on their DeFi wallet. You are able to select your preferred speed and slippage with no service fees involved. You can swap for absolutely free. I have in fact tested this on the platform. So essentially giving you the opportunity to swap your crypto for free. I mean, what bank is offering you that? Never mind what bank, what centralized exchange is offering you that? None of them are. Not even the Crypto.com centralized exchange is, but that is okay because they are offering it to you through the DeFi wallet. And I think that another big thing when it comes to the mass adoption of crypto is in fact going to be the actual wallet addresses. We've been talking about how wallet addresses, in my opinion, are kind of harmful when it does come to crypto because it makes things very complex for actually sending and receiving receiving money. And that is why Crypto.com has actually funded their very own ID project in the form of Cronos ID. And this is a project that we have covered quite a bit on the channel, as they are actually doing an upcoming airdrop. I think it'll be a very juicy way to make some money off of their new Crow ID token. And just recently, they have finally integrated Cronos ID into the DeFi wallet. You can see it here. This is not yet available for me in Canada, but they are rolling it out globally at a slower pace. And effectively, what this means is that the same way that you have actually replaced phone numbers with contact names, you are now going to be able to replace long and complex wallet addresses with easily readable domains. Once again, really fostering that innovation and growth through making these platforms easily accessible to newcomers. And that is why I think Crypto.com is going to be very successful in the next bull run. And in my opinion, an easy contender for a top 3 exchange. So on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you're all having an amazing start to your weekend, and I hope to catch you in the next one. Peace out for now.